Most traders learn strategies, very few learn how to think. Today I'm breaking down what was going through my mind during some of my recent trades, what I saw, why I entered those trades, and more importantly, why I exited those trades, and even where I messed up. Because the honest truth is, your psychology decides whether you make money or lose money. And by studying your own thought patterns, you can improve faster than most people ever will. We all talk about chart patterns and learning technical analysis patterns, but what really is more important than that is learning to decode your own thought patterns. Let's jump into these charts. All right, so here I'm going to be breaking down some of the swing trades that I took, right? We can dive into day trades perhaps in a different video, but I wanted to give you some of the recent swing trades that I took, some winning trades, some losing trades, so you can kind of see what I was thinking and try to understand my head and what I was looking at, what I was seeing, why I got in, why I got out, and maybe some learning lessons from those trades. Now, as you know, with technical analysis and all the strategies that we teach, they are applicable to any time frame. So right now, if I'm swing trading, I'm going to be looking at the same patterns, but on a daily chart, weekly chart, monthly chart. But if you're day trading, you're going to be looking at the same stuff, but maybe on a 1-minute chart, maybe on a 5-minute chart, right? So that's the only difference. The technicals still stay the same. So the first one, I want to start off with a loser, which is CPB, which is a Campbell soup company, right? I think. So CPB on the monthly chart, sold off almost down into some support. And I was like, okay, this thing is down quite a lot on the monthly. So if I can get a decent trend change type of setup, then that could be a good one to look at. So then I go into the daily chart and I see, okay, this thing has been clearly in a downtrend, right? Stock keeps dropping. And then right over here, right over there, see the downtrend line, and it broke it. It finally broke the downtrend line and entered what was looking like it's going to go back in an uptrend. So there, before all of this happened, I traded this stock in about September of this year. So I was looking at this stock, taking out the downtrend line, and it used to be below all the moving averages, and then the moving averages went sideways. And then suddenly here, you notice something changed? The moving averages, this red line and the green line started to crisscross. Here, they had an equal distance between them, which is a classic downtrend. But here, they start to crisscross, and then the price gets above all of these lines, above the red line, above the blue line, above the green line, which is the 50 MA. It gets a bit above all of that. And then right over here, I noticed that, okay, it's trying to form this sort of like a wedge over here, right? A little breakout pattern is forming that I like that for a long trade. So I got in this stock right on this day. You see this little day where it tried to break out? So I got in at $33 and let's see here. So I got into the stock at $33 and something change. I put my stop loss right under this base below all of this support. And then, the stock, literally the day it triggered, it popped and it came all the way back down, like literally ding, all the way back down. And then the trade ended up stopping me out. So I took a minus 1R loss on that trade. And then I was like, all right, let's keep scanning. Let's find another trade. So this was a losing trade. Now, learning lessons. Whenever you lose on a trade, the first question I ask myself is, was it a good trade that just didn't work, or did I do something wrong? Okay. If I saw this chart pattern again, would I trade it or would I skip it? And then I answered my question. I was like, you know what? If I saw that pattern again, I'd probably still trade it again. So I was like, okay, so then it was just a good trade that just didn't work. And guys, that's part of the game. Do you know that you cannot win 100% of your trades, right? And if somebody told you that or sold you that dream, please get rid of that as soon as possible, because it's impossible. There's nobody out there who can win 100% of their trades. Nobody, right? Even 90, 95% is pretty hard to maintain over the long run. But I asked myself the question, I was like, you know what? I would do that trade again if I saw it again. So then I just chalked this one in the books as good trade, just didn't work, right? And then as a good trader does, we use stop losses. So when the stock broke here under 32 something, 32.50, we got out, right? Now we didn't keep holding. Imagine if we kept holding. Now instead of getting out at 32.50, this stock would have dropped all the way to 29.50. And so we avoided it going down by getting out of it early. And so that was CPB. Another decent one that I want to talk about is JBL. We shorted this one. Jabil, I think they make those speakers, right? So we shorted this sell setup here. So we noticed this stock was in an uptrend, massive uptrend here. But then here, look what happened. It broke the uptrend, came back up again, and this time it couldn't continue the uptrend. This is what we call a false breakout. This was an area of resistance, couldn't get above it, right? Look at it. Banged its head around 230, came down. Banged its head around 230, came down. Went to 230 again, came down again. So next time it comes back up, goes to 230, kind of breaks above it, but couldn't sustain that and it came all the way down. So this is what's called a false breakout. Then after the false breakout, the stock gaps down on earnings, rallies back up. Let me zoom in over there, right? Rallies back up into those moving averages. This is what we call a sell setup in the PTS course. So all I did was simply put an order to short it under here, right? Put the stop loss above this sell setup right over there. And then boom, next day we got a beautiful red moves down on JBL, and on this down move, we ended up taking our profits. And that ended up being a good trade. And this trade was also based on the monthly time frame being really extended, right? Look at this monthly chart. At the time we took this trade, this stock was really, really extended. It was like up 3 or 4 monthly green candles in a row, right? And then we took a short position. Stock came down from 230 down to about 194. We took our profits and we got out of that one. So that was JBL. The next one we had, which was a really good one, which I think is a good one to learn from, is SLNH, right? Soluna Holdings. So this stock was a classic technical pattern. We all know this one. As soon as I draw it, you'll be like, okay, Anmol, you don't need to talk further. I already know what you're looking at, right? Right over there. Notice same thing again, coiling pattern that I talked about, right? The wedge pattern, wedging, 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 wedging. As the wedge gets close to the apex point, it's got to make a decision, up or down. And then here, in this case, stock gaps up, goes from $2 a share to $5 a share. And I sold it right at 5. I had a sell limit order at $5 in the newsletter. And we took our profits there. Why? Because I always have a concept in trading, which I've talked about before. I call it feed the ducks, which is when ducks are quacking, you feed the ducks, right? So when nobody else wants the stock, we buy it. Now, when everybody wants the stock, it's the hottest stock on Twitter, everybody wants to buy it, we let them buy it. We sell it to them, right? We feed the ducks. So we fed the ducks and the stock came down from 5 down to 3. And so yeah, that was a great exit there. Classic wedge pattern, guys. Look at this. Just zoom in, zoom out, mark this pattern, right? These are really good ones to look at on SLNH. So that is what we did on that. Next one, let's go over a losing one, which is AI. So I lost on this trade. I still like the stock, but it's just been a pain in the you-know-what to trade lately. So the stock's been beaten down, from $80 a share down to 17, but it's forming a sideways base. Again, this is a good stock to look at for long term because it's sort of consolidating here sideways at the lows, but it stopped going down. So I think that as long as it stays in this sideways area, I do think that this stock in the long run could go all the way back up. But again, I digress. So let's go over the trade over here. So I noticed that this was a clear area of resistance. Right? Stock was at 15, goes to 18, 50, but then goes back down again. Comes back down to about 18 area, goes back down again. So when it finally got above that 18, and then it pulled back to that area, I bought it on this day, right? We got a nice green candle. Stock started to look really good. It was doing a buy setup, but then out of nowhere, the stock just came all the way down. So I got out of this stock and I took a loss, and it was a minus 1 hour loss on the ticker symbol AI. Now, what did I do right or wrong? Well, if I'm objectively reviewing it, I think the trade definitely had potential, but the main issue was it did not participate with the markets, right? I mean, look at the markets. The stock market's been going up, 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 up. The stock was not really going up at all. So this stock had relative weakness. It was relatively weak compared to the markets. So that was one issue there. The stock was relatively weak. But the other issue was that, honestly, technically, I don't think I did anything wrong, but it was just not a clean setup, right? Like the clean, obvious ones, they just stand out. This chart has kind of been all over the place. It's been a mess to trade lately. So perhaps the stock just isn't ready yet for a move higher. But I still continue to watch it, right? I don't lose money on a stock and I just say, all right, you're done. I keep it on the list. Maybe they were not there yet, but maybe they could still be interesting in the future. So in the future here, notice this moving in a channel, up and down, up and down, up and down. So now I know it's in this channel. So now I also know that the only time to buy is not in this channel. It's when it breaks out of this channel, right? That's when it'll start to move. So right now I'm not doing anything with this stock, but I am watching it. The day it breaks out above this channel, then I will buy it again. But until then, I'll let it do its thing because it might just continue to channel, right? It might just continue to channel all the way down. So we're going to let the channel break before we get in it again. So that was a loser on AI. A couple stuff that I'm actually still in. There's a lot of stocks that I'm still in. So one of them that I'm still in is Zoom. right? This was called in my swing trading newsletter, right? We got into this stock right over here at $80.50. Right? We already sold a little bit on Friday. We already sold a little bit on Friday's run up. Why? Why? Because feed the ducks. And Monday, this stock, I think Monday, or whenever you're watching this video, I think this stock is going to go back to minimum 87, but more likely, I think it's going to be heading towards 90, perhaps. We'll find out, right? When I don't know when you're going to watch this video, or when this video comes out, but whenever it is, I think that this should be going much higher by that time. So that's one that we are currently in. Now, what were we looking at? What was the trade idea? Remember I talked about channels or bull flags? Same thing here. This stock was channeling down. See that? Channel, channel, channel. Moving in this channel up and down, up and down, and up and down. So when it breaks the channel, that's when we buy, right? That's where we bought it. And whoa, voila, look at that. Broke the channel and now it's moving in the right direction. So that is what we did. We traded a bull flag channel breakout on a stock that's in a massive monthly chart, stage 1, and looking really juicy for a move higher. So that is Zoom Communications. Another one that I'm currently in is FUN, Six Flags Entertainment, right? Fun, which is a nice stock name. It's called Fun, Six Flag Entertainment. So on the monthly chart, the stock, I mean, literally a complete mess, came down from $55 down into like 20 something, but into an area where it bounced previously. And we're seeing massive volume increases over here. So that's when I got into the stock, expecting a daily 3-bar play. And I got into this trade on a 60-minute buy setup over here, right? So I'm still in this stock right now, and we will see how this continue to play out. What I've done is my stop loss now is right under here, right? My original stop loss when I got into the trade was over there, but now I've raised my stop loss over there. And if this Six Flags continues to trend its way higher, then at some point I'm going to just put my stop at break even, and I'm just going to let the trade ride and see what it can give us. All right. As far as targets, how do I pick targets for something like this? Well, I always look at where's the next area of resistance, and I say, okay, there's a gap fill here, unfilled gap. So that gap could be the target. So that's what I'm looking for on this trade. So irrespective of whether you're watching this video, maybe you're watching this video and the stock has already stopped me out or already hit the target. But again, I want you to notice the learning lessons, right? On how we pick the targets. So the way we pick targets on something like this is by looking at the next area of resistance, in which case, in this one, is going to be around $30. Okay, so that is another trade that we're in. Another recent trade that I did was on CRM, Salesforce. So this stock, again, same thing. It's been in a massive downtrend, but on the weekly chart, we're into a area of support. See that? This area used to be the ceiling resistance. Resistance was broken, came back down. That resistance, once broken, became support. And it's become support so many times. It was support in 2024. It was support in August of 2024, April of 2024. It became support again in like April 2025. Then it came down again in August of 2025. So clearly this 229, 230 area is a massive area where buyers keep stepping up. And that's also where the 200 period moving average is. So I'm looking at this as like a weekly double bottom, which is also, as you can see here, a monthly buy setup. So then on the daily, I wait for it to break the downtrend, and then I get in. So look at over here. Downtrend line, stock sells off. 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 Finally, breaks the downtrend line, and I think I bought the stock at 247 right over here. And then since then, it went up from 247, went up to almost 268. We sold 2/3 of our stock over there. Right? Why? Feed the ducks. 2 up days in a row. We fed the ducks there, and we're holding 1/3 right now, but I've already raised my stop loss right under here. Okay. And I got in at 247. So worst case, if it keeps going lower, I'll get out at 253, which is still a profit from my entry of 247. And 2/3 of our position, we already took profits at 265-ish area. So nonetheless, it's going to be a good trade. But if it can hold here, then the next target that I'm going to be looking for is going to be for it to go back to the 200 MA, which is also this area of resistance to the left, which is going to be 271. So that's what I'm going to be looking for on this CRM. So those are the swing trades, right? I'm trying to give you different perspectives because the previous videos we've done are all about day trading. But I want you to see, never put yourself in a box, right? When people always give themselves labels. Oh, I'm a day trader. Oh, I'm a Forex trader. Or I'm a swing trader. People ask me, what are you? I'm like, I'm just a trader, right? Sometimes the trader sees opportunity for a quick day trade. We do that. Sometimes there's no opportunity for day trade. Then I look at swing trading, right? Sometimes there's no swing trades. I might look at some long-term stuff. So a good trader is somebody who goes behind opportunities. right? And not putting yourself in a box of being just a short-term trader or a long-term trader. Do where the opportunity is. Okay. So the biggest analogy I can give you for growing your trading account is to think of your trading account or your bank account as your army. The money that's in the bank account, the money is your soldiers. The only job of that army is to go out to battle for you, capture enemy soldiers, bring it back so your army can grow. Does that make sense? So that's the goal with all of that's what trading really is. I'm sending my money. Hey, you go here, take a day trade. You go buy this long-term stuff. You let's do a swing trade with you. I'm sending my soldiers out to battle, and some of them will get killed in the battle. They'll never come back, or they'll come back really wounded. But some of them will come back and bring other enemy soldiers, capture them, and bring them back so my army can keep growing. That is how you grow a trading account. So hopefully that was beneficial to you for me to break down some of these swing trades and why I took them. And again, let me know if this video was helpful, and maybe we could try to do a similar video like this, breaking down my day trades. But I just wanted to give you insight into how I analyze these stocks and how I analyze these things and what am I looking at, right? So the takeaways for you is notice how I drill down on all my stocks. I start from the monthly time frame, weekly time frame, then I go to the daily, and then maybe I go even lower to the 60-minute chart to actually find an entry, right? And then I'm also looking at technical patterns. I'm also knowing where my entry is going to be, where my stop loss is going to be. And so that's what I want you to take away from this video. So go out there, make it happen, crush it in your trading, and keep me posted in the comments on how you're doing. I hope this was helpful. If you'd like to see more trades like this over my shoulder, and again, all these trades have been done live, whether in the live trading room or in the newsletter, and I have another video where I break down my exact trading routine, which only takes me 1 or 2 hours per trading day. You can watch that video over here.